Recursion Pharmaceuticals Inc. RXRX is currently trading at $4.80 as of December 18, 2025, showing a significant intraday climb of 14.17% following a major catalyst that has effectively reset the market's expectation for the company's fiscal trajectory. While many observers have viewed Recursion as a high-risk biotech experiment that burns cash at an unsustainable rate, today's movement is a direct response to reality catching up with a long-held narrative of potential. Specifically, J.P. Morgan recently upgraded the stock to overweight, projecting a massive upside based on the blockbuster potential of its lead asset, REC-4881, which is targeting a rare genetic condition with few treatment options. This jump isn't just a random fluctuation, it represents a fundamental shift in how institutional players are pricing the risk of the company's platform versus the tangible value of its clinical outcomes. The expectation has long been that Recursion Pharmaceuticals would eventually run out of runway before proving its AI-driven approach could produce a marketable drug. The reality is that the company has just secured a clear path through 2027 with a cash cushion of approximately $785 million. If you look at the recent price action, you see a stock that was languishing near its 52-week lows, but is now attracting heavy volume as the market realizes the tech bio thesis is moving from a concept into a commercial reality. For those looking at individual brokerage accounts or exploring online investing options like the Schwab Intelligent Portfolios or a Fidelity brokerage, Recursion stands out as a unique intersection between big data and biology. It's not a traditional pharmaceutical play where you bet on a single molecule. It's an investment in a machine that builds the molecules. Recent stock movement has been driven heavily by institutional conviction. We are seeing major names like Vanguard Group and BlackRock increasing their stakes, while ARK Investment Management continues to be a vocal supporter. In the third quarter of 2025, institutional ownership reached nearly 75%, suggesting that the smart money is increasingly comfortable with the volatility in exchange for the long-term disruption. This is a far cry from the retail-heavy meme stock reputation some tried to pin on RXRX in the past. If you're using tools like the Robinhood app or SoFi Active Investing to track your portfolio, the increase in volume today, surpassing 14 million shares, signals a breakout from the $4.20 level that had acted as stubborn resistance. The market is finally rewarding the company for its strategic pivot. In early 2025, Recursion made the difficult but necessary decision to trim its pipeline, shelving some of its most advanced programs to focus resources on higher probability candidates. This was a classic moment of tension between expectation and reality. Investors expected a sprawling pipeline as promised during the merger with Exscientia, but the reality of clinical stage economics forced a more disciplined approach. That discipline is exactly what is being rewarded now. By focusing on REC-4881 for Familial Adenomatous Polyposis and REC-617 for ovarian cancer, the company is targeting multi-billion-dollar markets where its AI insights give it a documented edge in selectivity and safety. The relationship with NVIDIA stock and the broader tech sector is another piece of the puzzle that many investors miss. Recursion isn't just using AI, they are building foundational models in biology with NVIDIA's BioHive 2 supercomputer. This partnership, backed by a $50 million investment from the tech giant, means that as NVIDIA thrives, Recursion's computational power scales in tandem. This synergy is rarely seen in the biotech space and provides a moat that traditional drug developers simply cannot replicate without billions in capital expenditure. Whether you are managing your own stocks through interactive brokers trading or using a SoFi robo-advisor, the connection between semiconductor power and biological breakthroughs is the hidden driver of RXRX's valuation. Comment below how many shares of Recursion Pharmaceuticals you currently hold or if you're waiting for a dip to enter a position. Looking at the business model, Recursion operates as a platform as a service through its Recursion OS, while simultaneously developing its own internal pipeline. This dual revenue approach is critical. They recently hit a $30 million milestone payment from their partnership with Roche and Genentech, part of a collaboration that could eventually be worth billions. This provides a safety net that most biotech startups lack. When you compare this to other investing sites or look through your Fidelity Wealth Management reports, you'll see that Recursion is playing a very different game. They are not just looking for a hit drug, they are trying to industrialize the entire discovery process to reduce the 90% failure rate that plagues the industry. The reality of the financials does show challenges. Revenue dropped significantly year over year in late 2025 because it's lumpy, tied to those big milestone payments rather than consistent product sales. This leads to high volatility and periodic gap downs that can scare off less experienced investors. But for those using professional platforms like Interactive Brokers Platform or the Fidelity mobile app to dig into the balance sheet, the debt-to-equity ratio and the current ratio of 4.60 suggest a company that is actually quite healthy from a liquidity standpoint. They aren't in immediate danger of a dilutive capital raise, which is often the primary fear with clinical-stage companies. Institutional activity in December 2025 has been particularly interesting. We've seen a shakeout of some smaller funds that were impatient with the slow clinical readouts, which has allowed larger, more patient capital like the GIC and the Public Investment Management to maintain or grow their influence. This concentration of ownership can lead to sharp moves like the one we are seeing today, because there simply isn't much float left for the tourist traders. If you're doing online investment research, you'll notice that the short interest has remained elevated around 28%, meaning any positive news, like the JP Morgan upgrade, can trigger a massive short squeeze, fueling the double-digit percentage gains we are witnessing. What most people get wrong about Recursion is the timeline. The market expects immediate results because the word AI is attached to it, but biology moves at its own pace. The reality is that the Recursion OS is a feedback loop that gets smarter with every failed experiment. This is a company that has mapped over 23 petabytes of biological data. To put that in perspective for someone using Robinhood stock trading, that is more data than the entire Library of Congress. They are using this to find causal relationships in disease, not just correlations. This depth of understanding is why the JP Morgan analyst is so bullish on the probability of success for their lead candidates, citing a 60% chance of approval, which is significantly higher than the industry average for similar stages. As we look towards the future, the catalysts are clear. We have multiple Phase 2 readouts expected in 2026, and any one of these could be the moment the stock reclaims its $10 or $12 levels. The risks, of course, are still present. A single clinical failure or a safety concern could send the price back to the $3 range. This is why self-investing requires a high risk tolerance and a clear understanding of the tech bio sector. Using a Fidelity trading platform or a SoFi trading platform to set stop losses or manage position sizes is essential here. You don't want to be over-leveraged in a name that can move 15% in a single day, even if that move is to the upside. The tension between the expectation of a cash burner and the reality of a platform powerhouse is where the opportunity lies. If the company proves its model with REC-4881, the entire valuation of the biotech sector will have to be recalculated. Suddenly, every pharmaceutical company will want access to the Recursion OS, and the milestone payments we've seen so far will look like pocket change. This is the blockbuster potential that the big banks are now starting to acknowledge. For those into online investing, this represents one of the purest ways to play the intersection of healthcare and high technology. In summary, Recursion Pharmaceuticals is currently in a state of rapid price discovery. The move to $4.80 is a reaction to the market finally acknowledging that the company's clinical pipeline has real quantifiable value beyond the AI hype. While the revenue figures for 2025 have been volatile, the cash runway through 2027 and the backing of titans like NVIDIA provide a level of security rarely seen in the biotech world. The institutional accumulation we are seeing on platforms like Fidelity Investments and Robinhood suggests that the bottom is likely in, and the focus has shifted to the massive upside potential of $11 and beyond. The reality of RXRX is that it is no longer a speculative maybe. It is a clinical stage company with high probability assets and the most advanced computational infrastructure in the industry. The expectation that it would fail like so many of the 2021 IPOs has been proven wrong by its strategic partnerships and disciplined management. As you watch the markets today, remember that the 14% gain is just a reflection of the gap between what people thought would happen and what is actually happening. Whether you are using SoFi ETFs or managing an individual brokerage account, Recursion is a name that demands attention as we